All right, welcome back to Inside the Boardroom. Now, we don't get the opportunity to talk to too many oil and gas companies here on the show, but when we do, we learn quite a lot. Today, we've got Abby Badwi, the Executive Chairman and CEO of TAG Oil here to tell us a lot more about the company's evolution in the past few years and what they've been up to in Egypt. Abby, thank you so much for being here. Let's start off with talking about your efforts to reposition the company in recent years. Can you elaborate on how your management team's past work with Kuwait Energy and Bankers Petroleum have supported your approach?
Very good. Rachel, thank you very much for having me on your show. Listen, my association with TAG Oil started in 2020, and basically TAG Oil at the time had completed the sale of their New Zealand assets. They did a quite one-time dividend distribution. The company at the time had no assets other than a royalty that they were collecting out of the New Zealand properties. And of course, it was basically a shell that was sort of provided a good company to be able to put something new in it. And my conversation with the previous CEO, Toby Pierce, whom I've known for many years, was bringing the opportunity of involving TAG Oil in Egypt. I was looking at Egypt for a long time. I'm originally from Egypt. I also had several ventures prior to TAG Oil in Egypt. One of them was Ralley Energy, another one was Kuwait Energy. So all of that experience that I have gathered through the years gave me at least the experience and to know how to do business in Egypt. And TAG was an excellent vehicle to do that with. So that's how we started.
So TAG right now is really looking at development opportunities in the MENA region. You've got the New Zealand royalties coming in, so you're maintaining your balance sheet as well through that. Is that correct?
That is correct, yes.
Okay. So for our viewers who are unfamiliar with your Egyptian assets, what you're focused on here in this area, can you provide us some overview, specifically on your Bed 1 concession?
Very good. So that was the whole idea and the whole focus behind getting involved with TAG Oil. Is there was plenty of opportunity for unconventional development. As you know, unconventional development has really changed the industry in Canada and the US. And what do we mean by unconventional development? It's basically drilling horizontal wells and doing multi-stage fracture to extract oil out of a formation that is not able to produce under normal oil recovery techniques. So this is basically an enhanced recovery by utilizing these frac methods, drilling long horizontal well, multi-stage, and doing these fracs. So when we were looking at Egypt, even though there is a lot of oil in Egypt, it's all being produced under conventional methods. But we did recognize this one specific formation called the Abu Rawash F, that is the source rock for oil in the western desert of Egypt. And it has good porosity, it has high oil content, but it has no permeability. So if you drill a well into it, it does not produce under normal conditions. So you have to do something else to get the porosities connected, and that means fracking the formation with water and sands. It connects the porosities, and then you start flowing the oil.
The Abu Rawash F formation, also known as ARF, that's how you just described it, correct?
Yes.
ARF has been compared to Eagle Ford in the US and the Vaca Muerta in Argentina.
Yes.
Can you explain these comparisons for us and what their significance is for novice investors? Why does this matter?
Well, the reason it matters is those formations, and in particular the Eagle Ford in Texas, have very similar parameters as the ARF in the western desert of Egypt. So how do we compare this? Timing, the depth of the formation is the same. The porosities are similar, even though we feel the ARF or know that the ARF has higher porosities. Both of them have very low permeabilities. We do have very low water saturation compared to the RF, so that means we have better opportunity at producing the oil from the ARF, then at the Eagle Ford. And the most important thing is what we call total oil content. So the total oil content at the ARF is around 2.3%, and at the Eagle Ford it's around 2.4%. So very, very similar. And of course, the Eagle Ford has been very successful because tens of thousands of wells have been drilled in there. They're producing an incredible amount of oil out of this formation over the last 10 years. And we've just started. So we just drilled one well and completed one. So we are at early stage of developing this play.
Now, your horizontal well plus your vertical well have now produced over 30,000 barrels combined. How do these results influence your development strategy for the field? I know it's early days, but I'm curious to understand what this means in terms of strategy.
So the main thing is it was proof of concept. We went and did something that was not done before in Egypt, testing this formation with those methods that we have talked about, horizontal drilling, multi-stage frac, and it produced oil, and it produced significant amount of oil. Despite we've had some issues with our horizontal drilling, we did not complete a full 1,000 meter. We only completed about 300 meters of the horizontal section, but the results of that particular well encourages us that we want to continue developing this play with this method because we have proved the concept.
Okay, so how does your resource potential, Abby, 500 million barrels of oil, translate into development planning, particularly on additional vertical and horizontal wells?
So that's the oil in place. So how much can we recover out of that? So you can look at it that each well we drill, every horizontal well we drill with multi-stage frac can give us about 1 million barrels of recoverable oil. So our development plan right now, and it is only one part of the Badwan concession, includes about 20 wells. And we're looking at producing or recovering about 20 to 25 million barrels of the 500 million. So that's the current development plan. With its success, we can expand beyond that. So at the end of the day, we can probably recover somewhere in the order of 20% of that 500 million barrels. So that's 100 million barrels of recoverable oil. But that will require drilling as well 100 wells or 120 wells over the next 5 to 10 years.
In terms of partners to work on Badwan together, I believe you've engaged Lab Energy advisors to help, again, with the search for the international partner piece. What are you looking for in terms of partners, and how would they accelerate your development?
So that's exactly when I talk about 20 wells or 50 wells or 100 wells. That's very capital intensive, right? We're a smaller company. We have a market cap of less than 50 million. We've raised sufficient money to prove the concept. Now that the concept is proven, we would like to bring a partner with financial capabilities, with technical capabilities to partner with us in this endeavor. So what we would like to do is, and at least what we have engaged lab advisors to do, is find such a partner for us who would be interested in this play because we have the land, we have proved the concept, we have an operating team on the ground in Cairo, we have the expertise, the relationships, so we become very attractive for a larger company to come in here and invest in our development program and work along with us. So they will come in and help us drill the next 2 or 3 or 4 wells and earn an interest in our assets. So instead of diluting the company with issuing millions of shares, we would dilute the asset itself by bringing in a partner, and instead of having 100% of that concession, we would have 70 or 60 or 50% subject to the amount of investment that would be coming into this concession.
Now, you briefly talked on this, but you have years of experience that you're pooling together from large companies like Kuwait Energy and Bankers Petroleum. In today's climate, in today's market, what do you have to do differently while also bringing in all of that experience into your role here at TAG Oil today?
So basically what we have brought in is the ability to find the right assets. We have the right people, and it's always about funding. So in those two companies you've mentioned, Bankers Petroleum and Kuwait Energy, we were successful in raising hundreds of millions of dollars to develop these assets. So our ability to raise capital, and either you raise capital through equity financing, debt financing, or of course bringing in a partner. And we've done this in all of these assets. And we build it to a level, we are not going to be building this ourselves as TAG Oil for the next 20 years. We're going to prove the concept, and I've always said, build it and they will come. And basically by proving the assets, we should be able to at one time sell the company in the next 3 or 4 years and realize a good return to our shareholders. And that's how they're going to benefit. And we have the capability and an expertise to be attracting such a partner to come into the equation, or a buyer.
Last question before you go. On the idea of building, and they will come, expansion is another piece I want to focus on. TAG Oil has spoken of expanding its footprint in Egypt's western desert, effectively securing additional acreage to support long-term growth. Now, how would this expansion enhance your development plans and position it for further success in the future?
It makes us look more attractive, that we have more land, that we have a larger footprint. It makes anybody coming in here saying, this is not only about bed one, it's bed one plus this other new concession that is quite large in size. The other thing that is attractive about the new concession, it has some conventional production, which is, you call it low-hanging fruit, if you want to call it that. So for a small capital investment, which we can afford as TAG Oil, especially with the sale of our New Zealand assets, with the equity financing we did last November, we will have enough cash to be able to develop some conventional production, improve our cash flow, and improve our revenue for the company to continue our growth plan. So it becomes a key asset to acquire, and we're close. We're probably a month away, hopefully, from getting that signed.
Okay, we'll leave it there. Thank you, Abby. For viewers who want to learn more about TAG Oil, make sure to search TAO on CEO.CA to catch up on all of the investor chatter. Thanks for watching.